We are live, and today we have a special guest from Scotland by way of Edinburgh. It's a student at Edinburgh University, Arran Gray, and is on X at Arran Gray 9. He's going to share with us about market technicals, macro, maybe some thoughts about Tesla and Lemonade. So we're going to get into that. Also, Matt and I are going to talk about the compact in plain sight, a little bit about Tesla China FSD. And so we're going to get right into it. Pretty ugly day for Tesla. Let's start with that, Matt.
Not just
did you
for
finish
Tesla.
Above or below 300?
Above 302.80. I think. I'm not sure if that's the closing price, but that's the last I have on my little ticker thing over here. So we dipped under 300 for the first time, I think, since shortly after the election. A lot of negative sentiment I'm seeing on X. Although I would say we're probably not terribly surprised. Is that fair to say, Bradford? We were talking about this the last 2 weeks on this very live stream. Were you expecting it to come so soon?
Yeah. So the trigger may be not what we were expecting. So we had a bit of a crypto sell-off. Maybe some kind of macro unwind. People worried about a potential recession or growth scare. But before we get to that, Arran, you're in the UK. What are you hearing from about Tesla and Elon Musk from your friends there?
Well, just to preface, I go to a university, so a lot of my context comes from, fairly woke institutions. But just from basic observation, a mention of Elon Musk is only comparable to maybe Trump in, say, 2017, 2018. I think there's quite a big disconnect online, especially between X. There's a lot of support online for, what Elon represents, especially on Twitter. But come recently, I've seen a massive divergence in views. Writing an essay, say that I did 2 months ago on Elon Musk, was reprimanded by my lecturer. And this is in business school, just to preface. Whereas say 3-4 years ago, if I was to do the same thing, there would be no problem whatsoever. There'd be smiles all around. He's the type of person now that would start an argument at a dinner table. In fact, he definitely has. So if Mum's watching, hi Mum. But yeah, I'm sure she eventually will. But yeah, things it's pretty dire, in all honesty. And I think one of the main reasons for that is in the US, you guys have been exposed to Elon and the things that he creates and his good deeds and kind of his rise to fame. And most people, I'm sure, are watching Starship launches and are seeing Teslas all over the place and are just being exposed to that and have been for a good solid amount of time. In the UK and Europe, it's most people don't know anything about Elon's companies. Most people associate Elon Musk with Tesla. There's a lot of misinformed views. Media is super bubble-holed into pushing a certain narrative that just doesn't have the same type of balance that you get in the States, or counterbalance, so to speak. So, it's a bit sad. Depending on the person, I guess some people will give you a better reasoning than others, but it seems a lot to be from the gut and quite visceral. Yeah.
Mm-hmm. Can I ask you, what's the main issue? I mean, I could imagine if you're in Germany and you see him kind of campaigning for AFD, you might get upset that he's interfering in your electoral process a little bit. But for someone in the UK, where it seems like he's not really doing much there aside from maybe selling some cars there, and he's vocal in.
Well, he did go after Starmer.
Oh, I guess that's true.
Yeah.
That's true.
The very popular Starmer. Well, in honesty, I think the UK has been around for a very long time. I think some percentage of it is a culture difference. In the States, it's rise up. Really anyone can be president. This real sense of pushing for discovery and success and and that being okay, and that's built into the US way of living. Whereas in the UK, we have massive class divides that the US, I doubt will ever really understand. And in Europe in general, I think that's also the case. So there's this massive separation between people like orderliness in Europe. If you can't tell, if you've not seen the EU, I'm sure you've all seen the memes of EU innovation as the is the attachment you get at the top of a water bottle now that stops it from falling off, which is so annoying. That's like I just say some weird metaphorical example of just like European spirit and culture.
There's a bottle cap holder.
Oh, don't get me started. Yeah, it is. So
Let's see that again.
Oh yeah, so this can't come off. And so when you're going to drink it, you have to like position it in a way so it doesn't hit your face.
So you're literally getting teabagged by the bottle cap every time you drink some water.
Yeah, and no one likes it. No, everyone hates it, but
well,
that's European regulation.
I won't hold them against them. So I
don't even
want
think
to talk
they do.
Before we get into macro. I want to talk a little bit about what Matt was hearing about Ethereum. We had a big crash in Bitcoin today. MSTR was down, because they're long a ton of Bitcoin. They're basically like a Bitcoin holding company, selling their stock, selling debt to buy more Bitcoin. Ethereum, there was some kind of rumor about Ethereum. Maybe it's true. I don't know, about some kind of security problem with Ethereum. Matt, what was it you heard, and tell us a little more about it.
Yeah, so I wasn't expecting to talk about this. So this might be slightly more high level than I otherwise would prefer. But at a high level, there was a $1.5 billion heist essentially from the Ethereum network. I think it was on a chain or something called Bybit, which I'm actually not super familiar with. But it looks like this is a North Korean hack, essentially exposing a security vulnerability within the Ethereum network or some smart contracts that operate within it. And so this is very clearly a nefarious player. I don't know if it's confirmed whether it was North Korea or not. But one of the, I guess, strong suits of Ethereum, and I think some of the pride of that community in general in the past has been, it's so decentralized, like the code is open source and everyone is like very aware of how it works. And there's massive security essentially with the way that it's set up, and it's so decentralized. And just like security is like the foundation of why you would use Ethereum to begin with. And so for this $1.5 billion heist to essentially take place, now there's kind of this question: does Ethereum do a hard fork where they basically change the code to
give the money back
essentially? And so like the good news about that is that, okay, you get the money back, but the bad news is then you're kind of further eroding your claims of being a decentralized blockchain, which is, Bitcoin's like claim to fame in all this is that it's the perfect code that doesn't ever need to be messed with. And Ethereum has had a series of these hard forks over time, one for a similar kind of security level issue several years ago, several for kind of planned upgrades to the network where they just were kind of like going from proof of work to proof of stake was one example of a hard fork. And so if you do another hard fork now, just to kind of get this $1.5 billion back, it's like, okay, well, who's deciding when we do a hard fork and how secure is this really? And if they want to just change the rules on us at some point in the future and do a hard fork to do some, okay transaction that they just didn't like for whatever reason, what's to stop, them from doing that? So yeah. I think, Ethereum has been significantly outperforming Bitcoin for, the entirety of this kind of bull market cycle that we've been in crypto. Over the last year or so, Bitcoin kind of blew past all-time highs and then kept going. Ethereum never even reached all-time highs, and now it's back around like 50% of the previous all-time highs, whereas Bitcoin is now actually still above where the all-time highs were before. So Ethereum, I think, is in pretty significant amount of trouble. I mean, I don't own any right now. I'm not too involved in that space, but I've been watching it with interest over the last couple of years. And yeah, it's a bad story, I think, for Ethereum.
It seems like Bitcoin, Tesla, and Lemonade all trade together on like some of these big days. So, all three of them were down pretty big today. And maybe, Jordan, you can pull up the Bitcoin head and shoulders chart. That looks like an upside down bat or whatever. Pull that one up. And yeah, so this is a chart of the Bitcoin price, and maybe Arran, you could talk about this head and shoulders that you saw a while back that was forming.
Yeah, so I mean, quite a lot of the time with price movements, especially when you're in a zone where people are feeling, quite willing to sell, or big players are quite willing to unload, you'll see a lot of choppy range movement. Now, this is on a 1 week time frame, so this is quite a significant amount of time. If you zoom in closer to, say, a 1 day time frame, it has to be the most intimidating topping pattern you've ever seen. It does, it's very symmetrical. It does look like a bat. I can't imagine how any technical traders were looking at it and thinking, this is a great setup. Now, obviously, the neckline, which is about $92,000, was broken today, and the drop was very fast. I'm guessing a lot of liquidity was pulled, a lot of stop losses hit. Um, you could see it coming for some time. There was a lot of pushback, FOMO of people saying, no, we've still got higher, we've still got higher. But I think now, after today, it's almost definitely confirmed that Bitcoin is going to have some period of, local drop or sideways movement. But it's fairly significant for another reason, which I'll go into in a wee second. Now, when you overlap Bitcoin local tops over the last 5 years with major indexes like the NASDAQ or the S&P 500, there's a very repeating trend of, within a period of around 4 to 5 weeks of Bitcoin topping, so too does the NASDAQ and S&P 500. So I don't know what it bodes for the overall market. People are obviously, you like to think of Bitcoin as a safe haven for the people who are bullish on it, but in times of crisis, it does seem to just follow in the opposite direction you'd expect for a safe haven of value. Not much more to put on it than that, but the fact there's a correlation between Bitcoin tops and NASDAQ tops, I think that's also got the market a wee bit jittery, because it's probably not too good of a sign, especially because Bitcoin tracks M1 supply. So we'll have to see how it plays out. I know a lot of people are going to be hurt, as is always the case with Bitcoin.
So leading up to that big head and shoulders, you had a really steep climb up. Would you be surprised if there was a steep fall down in Bitcoin from here?
Yeah, I mean, I think everyone who's looking at technicals expects a fairly steep fall down to about the 70,000, 60,000 range. If you look at Bitcoin's price fluctuations over the years, there's never any substantial, really large scale rallies like we've had recently over the last 2 years without significant drawdowns. And, perhaps that's to change someday, but today, definitely not. And I think a major reason for that, and same too with Tesla, is just the retail crowds. I don't like the derogative dumb money, because I consider myself dumb money at times, but because of just the amount of leverage and the amount of positions owned by people who perhaps don't know how to protect, or are expecting a 10x from here within the next 2 years, it serves as a lot of downside for when the big selling comes and the stop losses are hit. And I don't know what it would take to stabilize the price, but like I said, people are going to get hurt. And I think it seems to be kind of emblematic of bull market peaks, where something does a 2-3x and everyone's still screaming for higher. So we'll have to see how it turns out.
Jordan, could you pull up the triple Q channeling pattern? And Arran, you talk us through this one here.
So this chart is this is the NASDAQ 100. And one of the things that me and Brad and Matt have been touching on recently is bull markets are very obvious identified in technicals, and it's two channeling lines, one resistance, one support, usually with different gradients depending on the bull market. Obviously, over the last 5 years. Sorry.
Let me tell you what. I'm sorry to interrupt, but what stands out to me right away is like there's a certain length of time that it seems to go up in a channel, and the longer the channel, I would say, like if I'm a bull, the more nervous I get. So that's why this chart really stood out to me. Is like this channel has been one of the longest channels that we've seen in the NASDAQ for a while.
Yeah, I mean, not only one of the longest, but also one of the, the most volatile and swinging up. And that's even in contrast to 2020, which was a massive wave of liquidity worldwide. So yeah, it is the case that the longer you're in a bull run, perhaps the more naturally nervous people get, because you've got to question how long can this go. Bull runs are just, at the end of the day, I guess, a balance between economic cycles, where it's only natural to go through some sort of increase in the standard of living, and then some sort of pullback into a recession, inflation, whatnot, through those cycles. So yeah, it's a repeating trend, and it has been across almost all of the stock market history, but especially within the last 5 to 10 years, this pattern is fairly stable across time. Now, the question is, what happens when it crosses below the bottom channel? There's not been a single time that this has happened, at least in a significant manner, where the stock market hasn't gone through a serious correction. And in the COVID 2020 case, a serious crash that was completely unexpected. Now, overlaying on top of that chart, there's two technical indicators that kind of add some more detail, which might give people a sense of where tops are usually found. I'm not sure if you can bring it back up.
The NASDAQ overlay is next. Sorry.
There we go. That's the one. Perfect. Okay, so if people take a look on the bottom here, we've got the Smart MCDX. Now, this is an indicator that I stumbled into maybe 6 months ago, and it is an absolute goldmine. So what it does is it divides up buy flows into their size and volume, and so it's not 100% accurate between the three colors. So green is retail, smaller buyers, incremental buyers. Yellow is usually trading. So these are really fast, be it algorithms or actual traders. So a fast amount of in and out, usually leveraged positions with stop losses, etc. And then red is the institutional money flow. Now, one of the things you'll notice when you overlay this onto literally any stock graph is that the only times a stock makes significant moves where you feel happy looking at your account, or at least a little bit better, is usually when institutions step in. They're the big money. When you get a lot of demand for a stock or an asset at the same time, the prices rise quite considerably. Say when Lemonade went through its recent, third quarter rise from $18 to $55, that was all institutional buying. Overlapped, it was maybe 95% of the flow. So, that's one thing to take notice. Another is that when institutional buyers start pulling back, that leaves room for retail and traders to kind of take hold, but there's nowhere near the same amount of buying pressure. So that's when you start to see declines, or you start to get signals of, okay, things aren't looking too good right now. For some reason, institutions aren't getting in. You can hypothesize as to why. Perhaps, macro, perhaps it's something they're seeing on their internal dashboards that just doesn't make them too happy, or maybe a combination of technical signals as well, which I wouldn't be surprised about. Now, throughout these
when institutions are the least active is typically when you hit a bottom and you start a new channel. Where the proportion of green gets to be substantial. So you see it at the end of the whole 2021 fall. The green is pretty substantial, and this is toward like the right half of the graph. and then that's where that new bull run started. So I thought
Yeah.
those were some interesting things. And then you got to thinking about the M1 money supply, and then what Doge is doing, and the Fed, and some other things. So
Yeah,
let's
I would like to
bring up the M1 money
quickly add
supply.
one more. Yeah.
Okay,
I
there's an overlay, or which one is it?
No, I'd quickly like to add one more thing. When
Okay.
institutions start pulling back in this manner, you've noticed that throughout the last three bull runs that weren't interrupted by some sort of external event that couldn't be predicted, like COVID. This institutional buying, it usually declines as time goes on, and as it starts to reach the level where it is exactly right now, which is about 50% of flows for a considerable amount of time, or at least the average trend is cutting to that level. That appears to be the point where there's, where the market starts getting choppy, where topping patterns start forming. And, I'd be very cautious. I think that's what the market's reacting to on some level as well. So,
Mm-hmm. Okay.
hmm.
So the Doge is cutting government spending, taking some money out of the system. People are starting to worry about growth slowing down in the U.S. The media is starting to talk about recession, and the Fed seems to be sitting on their hands. Let's take a look at the M1 money supply. So what when it hits this peak, is that recently, the M1 money supply, or when was that it hit the peak there, Aaron? Do you know?
Yeah, sorry, I just cut it there for a wee second. Yeah, I believe the peak up here was. I need to look at the chart directly again. I believe it was exactly the point that the market started to turn around, which would be, the bottom in 22,
Oh, okay.
after the inflation. Yeah, but obviously, as we can see now, as it started to, I mean, it's reduced significantly over that last wee while. Um, and then we've obviously got this bull pattern where I don't know how much liquidity that is. That's 18 to 18 point. Yeah, so that's about $500 billion of extra liquidity added into the system. Those periods where cash is flowing in,
Mhm.
there's a direct correlation between M1 money supply and things like the price of copper and the price of Bitcoin. You overlay these things, quite often what you'll see is there's a really strong correlation, which
Mhm.
is interesting to note because obviously now, if you look at the rate of change of them on money supply, it's starting to turn around again.
Yeah.
And when that happens, there's less cash in the system. There's less inflation in a sense, pushing up asset prices. It shows, I guess, the Fed's attempts to reduce inflation and to start slowing down the economy a wee bit to solve inflation are actually starting to kick in, to a considerable degree. So, just an interesting chart to notice that rollover seems to have occurred in the data in M1, and
Mhm.
in coincidence with Bitcoin topping as well. I wouldn't expect it to be too much of a mistake that those two things are occurring at the same time. Um, yeah, and it obviously brings fears now that inflation's down at the levels that it is. Yeah, it's not within the target of 2%, but it's fairly close. If you have a rollover when it's at 2% rather than the 8, 9, 10% that was back in the inflation boom in 2022, perhaps can become a problem. And you're starting to see that, sorry, in things like gold as well.
Mhm.
So I'm not sure what your guys' thoughts are, but the circulation of money is a key thing when it comes to asset prices and especially stock prices. So
Well, we know Warren Buffett and his lieutenants don't like to buy stocks at inflated prices. So we've seen them raise cash recently. Um, and we got a chart of that, the Berkshire cash. Um, so that it's quite substantial, over 300 billion. Is that right?
yeah,
That's a lot
yeah,
of cash.
I believe it's over 350 now. Yeah,
I think that's more cash than Apple has. I could be wrong. It's a lot
it's
of
shocking.
cash.
Yeah, they own more short-term treasuries than the Fed. That's literally, yeah. I mean, it's fairly stunning.
And they also said that we don't want to keep cash at a high level. So like, with their investments, they want to have a majority of their investments in equities. So they did clarify that. So they're not wanting to keep cash high forever.
Bit conflicting.
So that they want to own mostly American equities, but American companies that can have international operations of significance. We've also seen margin balances are really high. People have been using leveraged ETF products. People getting into leaps. I noticed, there are a chunk of people who got into Tesla leaps late last year and were like super eager to convert their Roths early in the year. I think typically, like, you want to, like, if you're going to add risk to your portfolio, you want to do it in times of stress rather than when times are good. It's kind of FOMO. It's FOMO to, I think, to do your Roth conversions or to buy leaps early in the year. Because typically Tesla has these big down moves. I wouldn't compare Tesla to Bitcoin. The down moves in Bitcoin have been even crazier, but less frequent. Like to share about margin balances. Jordan has that one. That's a good one. So we didn't get a chance to clean up the layout, but what we can see here is the previous peak is from 2021. So that's from November 2021. And we just achieved that same level of margin balance in the last month. So that's a bit concerning, where these high margin balances can't sustain themselves forever. Now, maybe you'd expect it to be higher than the previous peak, where it peaks out, but that just shows like there's a heightened level of speculation in the market, animal spirits, and with margin balances at these high rates, it's generally not sustainable. And then they can screw with you. There were people, you can take that away. There were people who said that, suddenly, I don't know if this was last week or the week before, where they changed the margin on lemonade to 90% from 60%. So basically they were forcing a lot of people to sell some of their lemonade at bad prices. Now, Matt, I don't know if lemonade earnings are out yet. Have you checked?
They're not yet. So okay. I've been checking in the background.
F5.
Yeah,
so
they're
watching
notoriously at 35. Yeah, they're notoriously at 35 to 40. Yeah, or the build up. One thing I'd like
Matt's
to
on the
to
lookout for that. But back to macro. Doge with their spending cuts. Arran, you liken that to money coming out of the system. Even if it's fraudulent or wasteful, it is money coming out of the system. And generally, if Doge is successful, the Fed should be cutting rates. But I've made the case since November, when Trump was elected, that Jay Powell is acting like a tenured professor. So he's, you can't get rid of me. I'm going to do what I want. That's something you have to deal with over Edinburgh University.
It definitely is. It definitely is. It's funny. There's quite a few professors that are, 1995. They're really old. For people that don't know, Edinburgh University, I think, is 1,000 years old or something. So maybe they've got a few of them in some closets in the corner, some skeletons that they pull out to do tutorials now and again if they want to skip them. One of the things I'd like to comment on is, that margin balance is really interesting. Although it's not higher than 2020, sorry, around that peak 2022,
Mm.
there's 3 trillion less in money supply. So 3 trillion
Okay.
has been pulled out of US circulation, and margin
Mhm.
balances are at the same level. Now that seems like an odd discrepancy. So I'm sure if you were to control for money supply in terms of total leverage positions as
Mm.
percentage, then you'd see it is significantly higher. But yeah,
Yeah.
one of the things I've been talking to you guys about is Doge, and I think you guys caught into this earlier than me, and I caught up recently, and I was like, ooh, maybe this might be a problem. Is that institutions are stepping back for a reason. We don't know exactly why. But one theory, or part of the equation, might be that Doge, although it's going to have great long-term effects on reducing debt and the deficit, is effectively aiming to withdraw another 2 trillion in yearly spend from the government. Which, at the end of the day, not all of it would go to the U.S. economy, but a lot of it would go to workforce paychecks. Although they might not be doing much, they're still going to be spending it. So, currently Elon Musk, I can't remember what the projections are for Doge, but 52 billion in savings already
Mhm.
accumulated. You pull that over to basis point terms, that's a 25% basis point hike. That's on the presumption 100% of that is going to flow into the US economy.
Mhm.
But it obviously, gives room to the idea that if this does work and Elon really can save 2 trillion in yearly spending, that's 2 trillion in liquidity that's going to be pulled. That's equivalent to
Yeah.
a thousand basis point hike over the course of maybe 2-3 years.
So you're talking
So
about pulling that spending out of the system is similar to tightening by that amount financially. Ultimately it makes things
yeah,
better, and it should
yeah,
reduce rates, but it has a similar effect where instead of stimulating the economy, you're taking out of the economy. But I
yeah,
got to think the Fed would be happy with today. You have Bitcoin coming down a great amount. A lot of names that are more on speculative growth side. I wouldn't call Tesla that, but Lemonade and a bunch of others.
mm,
We think we see the path to profitability for Lemonade, but a lot of people don't. They think it's an SH co.
Ooh,
But we don't.
letters out, and the stock is down right now. It's down about 9%. So
Okay.
I'll start digging into it in the background. We'll see.
Okay. We'll come
poor
back to you, Matt.
lemonade.
Poor lemonade. Poor everything. Everything's red.
Yeah, yeah. Um, Yeah, I think though, Brad, one of the things that I was also thinking about is the Federal Reserve is basing a lot of its economic indicators that it's using to inform its policy decisions uh, on these underlying government jobs, which is the largest is the largest employer in the states, on all this
Mhm.
extra all this debt that's being injected into the economy. Um, so the Federal Reserve is in effect not only been fighting the underlying true health of the economy, but also fighting against the debt that the federal government is using to basically push liquidity into the system as well. And now, if you've got one of those headwinds that's rapidly moving out the way, or at least the market and businesses can predict is going to rapidly move out the way, and you've got a Fed in combination that's using backward-looking indicators to judge their policy decisions on, it seems like not only are they using synthetic data, they're using backwards looking data, and a headwind that might be quite a bit larger than what people presume is now falling away fairly rapidly. Um, I don't know how much that's adding to the current market sentiment, but it would make sense that it would be, it might be a significant chunk of what people are trying to build into their economic projections.
Yeah. With how much Doge is trying to cut, the Fed likely needs to be cutting interest rates now or yesterday. Um,
Hmm.
so yeah, I'm not sure if that's why crypto was sold off today. Matt talked about the whole Ethereum thing, but we also saw in the charts that whole Head and Shoulders. So it did have probably some room or some gaps that needed to revisit. in the chart because it basically like shot up like a rocket around the time before and after the election. So maybe we could talk a little bit about Tesla now, and Matt can stick on Lemonade. Matt, I took you off the stage, so if you're talking, I can't hear you.
You remove him.
So you can add yourself back if you're ready, but want to talk a little bit about Tesla and the and all that. Do you want to go to Lemonade?
I'll just share a couple nuggets quickly that I found, and then toss it back to you guys for some Tesla talk, and I'll dive in a little bit more. So I think good news, bad news out of this report. The thing everyone was worried about with this report in particular was the California wildfires. Now, this is a Q1 event, but Jim Chanos was basically talking about how this could bankrupt the company and like their exposure is like really high. Some of the estimates we were seeing out there was like $100 million impact, which would certainly not bankrupt the company, but which would, certainly suck in the short term. We were sort of thinking based on some digging that we had done and others in the Lemonade community that it'd be like a $10 million type of impact. But what they're saying in the letter is that it's actually going to be more like hang on a second here, like a $45 million EBITDA impact in Q1. $45 million impact and adjusted EBITDA impact of approximately $20 million. So that's a bit of bad news. Now, I think it's really important to keep in mind that this is a one-time item and that they have more than sufficient liquidity to handle this. They've been reducing their home exposure in general, and this is, I would say, still significantly lower than what a lot of the like doomsayers were claiming out there. What I think is way more important and indicative of the long-term health of the company is their loss ratio. Now, so for those of you who are not insurance nerds, loss ratio is basically for every dollar you bring in, how much are you paying out in claims? Loss ratio in Q4 was a staggering 63%. That is phenomenal. That is so good.
That's awesome.
The core health of the business is unbelievably strong, I would say. So wow. I'll do a little bit more digging, but that is a bit of a mic drop of a stat, I think. Yeah. And then last one, I'll just show you. So they we're talking about their loss ratio by line, and car has historically been like very bad. It was over 100% for a long while. It was at 92% last quarter. It's at 83% right now. So really significantly coming down. Their homeowners multi-peril, which is kind of a weird one where they lump together. It's mostly renters, but it's also homeowners. That was 55% in Q4, which I don't think we've ever seen a 5 handle on any of their products before. So that's really good. And I can keep digging into some of the other nuggets from here, but overall, my initial impression is insurance. The fire slightly worse than I was expecting, but not.
We thought it'd be under 25 million, so it's 45, which a lot less than 100, but worse than 25 for sure.
Yeah.
All right, we're gonna kick Matt out again. There we go. Yeah, so that's very good. So let's just explain loss ratio for a moment. Essentially what it means is for every 100 cents on the dollar in premiums that you collect from the customers, loss ratio is how many cents out you're paying out in claims to your insurance customers. And typically like 70 plus percent is a good loss ratio, like 70 to 75. And then you have your added headquarters costs and R&D and stuff on top of that. So 63% is a huge number. I'm curious what they guide to for like the year coming up for like their loss ratios X, this California wildfire thing. I think this is great news, and it signals to me that the core underlying business is strong. What I would be interested to hear from Matt is like any early news about how good car insurance is going. I believe that they started advertising for car insurance in January, but also Lemonade doesn't have to advertise. There's people on the wait list. There's also people in the app so that have renters or pet insurance that they can just send an in-app notification. They can send an email. They might have their address. They can send them postcards.
Yeah, so
Any early
no
clues?
significant move in Q4, which is kind of what we were expecting because we saw that big uptick in activity kind of midway through Q1. What was it? Late January? I think we started noticing that.
Mid-January. Yeah.
Mid-January. So they had in Q3 they had $117 million of in-force premium on the car side of the business. That increased only to $122 million. So pretty modest $5 million increase in that in-force premium. But that's the line item that we think is going to go a bit parabolic in 2025 and beyond. So that I think is going to be driving a lot of the results. But it's good to see that the kind of core pet and renters insurance is doing so well.
Awesome.
Yeah. Well, the theory within the Lemonade community page is the reason why renters and homeowners is bundled is because had it come out the loss ratio of renters insurance, there might be backlash because of how low it is. Which means, if for people who maybe perhaps don't know Lemonade too well, they are working with policy types and coverage types that are, fairly fast paced, a lot of data to be collected, a lot of recursive programming of their algorithms using AI. And so these things like pet insurance, renters insurance, they take time to build up data, but it seems to be that when they do, Lemonade can offer renters insurance at 60% the cost of competition and still probably be in around 45% loss ratios, as some people have done the math behind, which is just absolutely phenomenal. So yeah, that sounds amazing. And kudos to Paperbag Investor, because I think he guessed 63% on his model, which is fairly bang on.
The other surprise for me, that was something that I was kind of thinking could be the case, but I didn't want to bank on it in our base case for the model. But they were talking about how cash flow is going to take a hit in Q4. It was actually positive. So that's a bit of a surprise. Adjusted free cash flow was $27 million and cash flow from operations was positive $14 million. So their core cash flow performance that's actually a pretty big surprise up. So I'm honestly surprised at the stock market reaction right now. I mean, obviously it's it's after hours, could be somewhat thinly traded. The call is going to be tomorrow, so we'll get a lot more color on that in the morning. But as I'm reading through this, I'm like, okay, the one piece of bad news I can see is that that fire loss, but that was expected, and I mean that's what we saw when the stock was taking that tumble from like $40 or so to the low 30s. So I mean, if you look at how much market cap has been wiped off by a one-time $45 million impact, it's kind of crazy.
Yeah, do you know what's really funny as well? I think in Q2 or Q3, they generated a surprise free cash flow that no one expected of I think around 40 something million, and everyone was kind of blown away by that. So consider this maybe not taking out the piggy bank. I don't know. I think the market is looking for any excuse right now to pummel things, and I think as is the case with
that's my
Lemonade.
Paranoid thought is that there'd be good news and we'd see a great loss ratio and the stock would still be down.
You did say that before we went live. Unfortunately, you jinxed
it's
it.
just
You
like
called it exactly.
The brutal mood of the day is like you have this brutal sell off, and sometimes when you have these brutal sell offs, that like things just continue in inexplicable streaks. It's just kind of the natural system. All right, so let's talk a bit about Tesla. There's been some positive developments. We're seeing Tesla hire for engineers for Cybercab. We're not sure if they make Cybercab, but Matt, you had a really interesting thought. So like Tesla's going to be limited in how quickly they can roll out truly autonomous vehicles. Each city has limits to the number of vehicles that a given company can employ in their first year of operation. So tell us a little more about your thoughts there.
Yeah, so my thinking is we've got this somewhat cryptic language that's been in the last couple of quarterly reports around new vehicles, including lower price variants or something like that. And so
More
everyone's been trying to
affordable.
more affordable. Yeah, we're trying to figure out exactly what that might be. The cyber cab we know is not going to be this year because they're not going to be launching in multiple cities. Well, I guess that's not the right language technically, but they're not going to start mass production of the Cybercab this year. But one of the things I was thinking is, like, if they are as confident as they appear to be on the timing of development of FSD, meaning that it's going to be significantly safer than a human in Q2, such that they'll have the confidence to launch autonomous ride hailing in Austin in June. They've been saying that for months now, and they're sticking with it. That gives me a huge amount of confidence that they believe, anyways, it's going to be safe enough. So if that's all true, then it's only going to be a matter of time before you are doing like widespread, kind of autonomy everywhere. And when that happens, you're going to want to hit go as fast as possible, because we've in the past shared some of the modeling around just how much cash flow each one of these vehicles will be throwing off, especially in the early years of the ramp when there's not saturation everywhere and you're essentially able to, undercut Uber's price like marginally and just generate a massive amount of cash flow at that price point. So if that's the case, you don't want to be like very slowly kind of creeping up the S curve of your production ramp right when you're like generating that much cash flow. You want to be producing as many of those as possible so that you can kind of get to that saturation point more quickly. So the thinking I had was, okay, well, if you know that you want that to be the case, why not basically start the S curve ramp up a year early and make a passenger variant of that Cybercab that they showed, which would of course have a steering wheel. It would have a slightly different layout in terms of you wouldn't have just like two massive chairs and like business class kind of setting. There'd be some reworking of the interior needed, and then probably the trunk would get reworked a little bit, I would think too. But make a couple kind of modest changes that aren't really structural in nature. The fact that they've developed steer-by-wire, and we know Cybercab is going to be steer-by-wire anyways. If you basically have all the same internal structure the same, but like strap in a steering wheel just like you have on the steer-by-wire Cybertruck, and then start. So you could basically sell that as a private vehicle that's ready for individual ownership. Now maybe it's a two-seater coupe, maybe even like a 3-seat bench in the front, or it could even be like a 5-seater or a 4-seater with like a very small back row. I think those are all different possibilities. But to me, it kind of makes sense that you'd have. And then this post was one that I quote tweeted, where you can definitely see the steering wheel in that vision, or in that picture. So there's clearly Cybercabs right now that have steering wheels, and it would seem to be the case that, all right, if we're launching a new lower priced product pretty soon, we already know that this architecture is something that we're going to be producing and doing it with the unboxed process. Why not start that manufacturing process now? Sell some of them to kind of increase the TAM, as Gary Black would say, get into a new segment, get some additional growth in the short term. But then also, I think more importantly, I think the way Elon would think about it is, like, if you're going to be solving autonomy in 1 year, you want as many vehicles on the road, and you want the run rate of your factories to be as high as possible at that point when you can just sell them into all markets. So kind of all those different breadcrumbs together kind of made me think that was a reasonable hypothesis, and one that I think just makes sense for the company to follow.
So then, because of that, you start making the compact. It's got fewer batteries per vehicle. It gets you ready for making that Cybercab. And people have argued, oh, well, Tesla has to change all these things to add the steering wheel and all the stuff. They can walk and chew gum at the same time. You can have a steering wheel that's steer by wire. You can have some other things, and I don't think you need to change a ton. They have some choices they can make, whether there's a second row or not. whether it's 2 or 3 seats in the front. You could get rid of the console in the center and put a seat in the middle and maybe put drink holders at the bottom of it, whatever. But this would make sense to start making a compact now, and it would definitely be a lower expensive, a more affordable model. Speaking of more affordable models, which we might get a different version in China compared to what it looks like in the U.S. Let's talk a little bit about Tesla FSD in China. Our new hobby is going to be watching Tesla FSD videos in Chinese.
I was finally getting use of my Mandarin degree. That was pretty helpful. Yeah. So were you surprised by this? I mean, I certainly was.
Yeah.
They've been talking about FSD being released in China for like 6 months now, I want to say, and it was going to happen, and then it wasn't going to happen, and then they couldn't train with the videos out of China on GPUs that were in the States. But then you can't ship the NVIDIA GPUs to China because of trade restrictions. So like there's been a lot of ambiguity on how far along they were on development of this and when it might launch. And then there was this latest bit of news that was like the Tesla FSD approval was going to be a pawn in the trade war, or the trade negotiations going on between the United States and China with Trump. Elon obviously being very high up within the administration. So like you got all these different bits of uncertainty that have been, I think, kind of clouding our ability to have a clear picture of when this is going to launch. And then all of a sudden it's like, oh, there's videos of people like actually using FSD in China this morning. So I was very shocked, and it didn't seem to get a whole lot of press.
Yeah, so we'll bring Arran back in a second, but we'll just take him off for a sec. I was surprised by it. I thought this would take longer than expected, and it could have been part of like some grand trade negotiation between the U.S. and China. Maybe involving TikTok and all this stuff, and how things are treated between like banning things in the U.S. and China. So I surprised that this happened for sure. And also surprising to me was Elon talking about the methodology they use to train it, basically going off of videos from the internet and then, converting that into their simulator, where they
I didn't see that. Okay. That's
they
interesting.
can run the rules of the road. So they basically trained it off of, they didn't even have like in-car cameras from Teslas that they trained it on in the US. So it's just like videos on the internet that were on YouTube and whatever that they trained it from.
So we've just seen a handful of these, and with my very spotty Mandarin, it's we don't necessarily have a clear picture. But I will say from just the very small group of videos that I did see today, it does not appear to be at the same level of what we have here in the States. I mean, this one that I was looking at that really sticks out in my mind is like this guy was turning left. It turned yellow and he's like, okay, brake. And then it's like red and he's like, okay, like really brake. But it just like busted through, like it was red before the front bumper actually got to the line, and it turned anyways. And then it was so funny. So then like it's in the left lane after it's completed the turn, and then it starts turning into the right lane, and then it just red hands of death. It's like, ooh, I might have done something wrong.
He was either looking not looking at the road, or it was having problems like reading his eyes.
Is that what it was? Okay.
Yeah, I've had the system have issues like reading the eyes of my mom and all that. So yeah, we're seeing like rookie FSD testers and getting red hands of death, or getting strikes for not looking at the road. But like it's pretty impressive, like how many I've seen other videos, and we're gonna endeavor to put some collections of Chinese videos on, and bring translations to the videos where you can see that. Should be fun. But what's impressed me is like the number of pedestrians and the number of bicycles and mopeds that are on roads. I saw a video where they were dealing with like some kind of parade on the
Wow.
road, and yeah, it's. I remember seeing an early version of FSD where they tried to run it in Vietnam, and in Vietnam you have all these mopeds, and as soon as like all these mopeds showed up to be like adjacent to the Tesla, it was like too many mopeds for it to track, and literally it just like smoke came out of its ears and it stopped. It stopped working. Um, so we're getting near the end of it. I do want to bring Aaron back if he'll bring his camera on, but we do have a little controversy here. Brian White, who's a Rebellionaire creator, we do have a lot of respect. He does point out that there would be a lot of changes for the Cybercab to go the compact. We do agree there would be changes. I I don't I don't pretend to be an expert on everything. I don't think there'll be a second row if they go off of the Cybercab,
Yeah.
because you might have a safety issue where if you get rear-ended, you got to protect those people in the back. That's a concern of mine. I don't know if it's valid or not. Um, so Brian
Yeah.
says there's a lot of changes that
So
would be
I
needed.
think there would be, but the way that I'm thinking about this, anyways, and I could be wrong. This is clearly speculation, but like if you ramp up the Model Y, let's say over a year, and then you do the Model Y refresh where you make a significant amount of changes, and the plants are down for a month, but then you get back up again. My sense is you'll be at a much higher run rate, um, in at that point at which you're kind of relaunching the lines. Where am I going? Over this way. Then if you just try to launch the new Model Y from scratch, at that point at which it's ready to go. So
Mm,
not to say that it's trivial and they wouldn't have some issues. I think they would. But like if the goal is to maximize the kind of run rate at the time when FSD is actually ready, when Cybercab is actually ready to launch, to me this
yeah.
makes sense.
Yeah, you might as well do it on something that can share the line with the Cybercab. Um, and yeah, Brian White points out something that we're somewhat saying, but maybe not emphasizing, is it is impressive what Tesla has accomplished. The FSD does look very good in China. Um, Apparently, there's some issues with curbing, but we're trying to find more videos where we're just seeing it in a variety of situations. So I'm on the lookout for that. So on X, I'm at Brad S. Ferguson. You can send stuff to Matt as well. So we're looking to find some videos that we'll be highlighting on our channel. We'll highlight the good and the bad, and hopefully not the ugly. But if there's some ugly, we'll share that too. Um, so and we have ways to do that. Arran, I don't think you're into Tesla as much as we are. Like, what do you think about all these developments with Tesla?
Well, to be fair, I was all in Tesla. This was, it was my first investment back in
Oh,
2019.
okay.
Yeah, I was 16 years old. I saved up summer money. I remember watching
Mm,
all the originals. Dave Lee, quite a few of them. That was my on-ramp to investing. And it went really well. I think I got in just at the bottom of the COVID crash, and that went spectacularly. And I still absolutely love the company, and I think it's obviously going through incremental S curves, and we're in the middle right now of one of the plateaus. But having that forward time horizon for Tesla, things look great now. Right now, currently, as an outsider looking in, because I'm mostly focused on Lemonade now, I do see a few headwinds. I think one of the main ones is just the politicization of Elon Musk and how that might
mhm.
transfer over into Tesla. I see it in Europe quite substantially. I don't know what it's like in the States, but there's obviously quite a lot of attachment to Tesla now being something that's you don't want to be seen in for some percentage of people in the population. I don't know how long that'll drag on. I think sentiment changes and shifts. But I think perhaps over the next couple of months, if these recession fears subside or if they start to grow, there might be even greater concern. Tesla's growth rate has plateaued a wee bit, and until these new models come out and boost growth, and perhaps there's some demand shift as well. If there's a recession in combination with a sentiment crisis in some sense for Elon, it might be a bit difficult. But eyes on bot and eyes on robo-taxi, and I still love the business. And if it goes any lower, I might buy. So yeah. One of the things, I was just looking over the Lemonade quarterly report, and I came across some pretty stunning statistics. Apparently,
Let's hear it.
the NPS of people related to wildfire claims
So hang on,
was
net promoter score. So that means
net promoter score. Sorry.
So it's the percentage of people that would recommend your product to their friends and family, and it's a net. So you subtract the people who would not recommend it. So like 100 is the highest it can be. Tesla has a very high net promoter score. There's a lot of tech products that do, but insurance companies are not well liked. They generally have pretty low net promoter scores.
Yeah, usually in the 20s, you see some in the 15s and 10s. I mean, they're absolutely atrocious. No one likes their insurance. No one's ever said a good thing about their insurance company. It's depressing, and everyone just wants it gone out of their life, which is, the problem that Lemonade's solving. Anyway, people who filed claims during the wildfire, the net promoter score was 91 for all people that partook in claims. Second statistic here was that powered by AI and aerial image capabilities, we were able to settle hundreds of claims within an hour of submission, even while fires were still active and evacuation orders remained in place. Amazing. Now, one of the things I'm noticing here that might have given the stock a wee bit of a bump was the fact that Lemonade honestly admit that had it not been for them diversifying their book into pet and renters more and getting out of the home book, their losses might have been 5 times greater. So that would have amounted to 220 million in negative adjusted EBITDA or free cash flow. So I mean, that's the fact that they have just avoided 160 million in losses is
I mean, that should be an attaboy for the management team, I think. I mean, they've been identifying this issue that they were underpricing home for quite a while, and specifically getting out of fire-prone areas. So this is something that's been underway for at least 2 years now. At least 2 years now. And so, if you want to penalize them because they made some business decisions that if they hadn't made them, their losses would have been a lot worse. Okay, I will buy off of that stupidity.
Yeah, I know. Well, I mean, we always presumed that this move was something strategic, and I remember at the time when they were removing from home, there was a lot of confusion within the industry types who were going, why are they doing this? And then wait a year, and all the incumbents were following suit. So Lemonade has that, ability to look over the horizon just a little bit further than these 100-year-old bureaucratic, ancient corporate complexes that are run by a million people at a time. I don't know. I think the fact that they avoided a potential 220 million loss is I mean, that, can you imagine the stock after that? That's a huge amount. So yeah, I really do like the earnings report. I think it's got a lot of great things. Now, guidance was another one of the concerns because people, Lemonade has been, especially the people around it, have been a bit traumatized by guidance in the past. From its drop.
People have claimed that management is sandbagging, and they always do a little better. And in their investor day, they talked about how they beat guidance for 17 quarters in a row or something like that. If they weren't slightly sandbagging or being a little conservative, they wouldn't beat guidance 17 quarters in a row.
No, that's true. The guidance seems a bit below our expectations. 1.2, I think we were expecting a little bit higher. But matter of fact is, they will definitely beat it. I think they're trying to build up this track
1.2
record of
billion
confidence.
in gross earned
in-force
premium
premium.
for this year.
In-force premium, yeah. Yeah, and Q1 in particular seems a little bit low because they were talking about getting to $1 billion, kind of my thought was like mid Q1. I don't know that they said that explicitly, but looking at some of the charts, it seemed like they'd kind of blow through there right about now-ish. But actually 1 billion even is the high end of the range that they've given for, March 31st, essentially. So that's slightly disappointing. I mean, there could be some non-renewals or something that are impacting that. But if car is really starting to ramp up in Q1, then why wouldn't we be seeing that in the in-force premium number? So that's a bit of a surprise to me. Also, I did notice that.
I think one of the things that might be, I think one of the things that might be going on is that Lemonade might be finding it difficult to make projections on, especially their CAC sure, they're going to be going through natural channels and onboarding new people, but I'm sure they'll also be expanding on through other ways, through people who aren't customers already with Lemonade. And perhaps they're just being usually precautious in their first toddler steps. But if anyone's watched the Investor Day presentation, you can see that they plan on having cars being a massive part of their business. So that doesn't concern me. Yeah.
All right. So pretty ugly day for Tesla. Ugly day for Lemonade before they had their earnings report. But I personally view this report as a big success. Jim Chanos, he has a great track record of finding fraudulent companies and shorting them. But we believe he's short Lemonade and likely also still short Tesla. Neither of them are frauds. And so I wonder at what point he moves on. Their performance in the California wildfires is great. Go ahead, Matt.
Well, I was just going to say, I mean, he was saying that this was the sort of thing that could bankrupt them. Like he was actually posting about how Lemonade's fire exposure in California could literally bankrupt the company.
Yeah.
So he was certainly spreading that sort of FUD. And I mean, he's off by more than an order of magnitude because it would have taken, I don't know, 2 orders of magnitude probably to actually bankrupt the company. Because when you look at their reinsurance, I think it was more like 200. I forget exactly what it said, like 20 million or 25 million, something like that, is their net exposure. So he couldn't have been more wrong on that thesis. Like, is it a bit of a bump? Yes, but it's like he was just flat out wrong. It's not an existential risk.
Yeah.
I almost feel bad for him.
Yeah. So it's a ugly day. We don't necessarily think that the market's gonna be done. One possibility that the market somehow turns on a dime is that this is just a crypto freak out, and that people are selling crypto related things and companies that they don't respect their growth or their fundamentals yet. And maybe it suddenly turns around on a dime that way, but we think it's more likely than not there might be some further pain. But we like the fundamentals and Lemonade and Tesla. We do think the Model Y re-ramp with the updated Model Y, that there's some potential that that's going to be misinterpreted as some kind of political boycott, some lack of demand for Tesla versus other cars that are out there. So we'll see what happens. So Matt and I are financial advisors, but this is not financial advice. You'll see our disclaimer at the end. Arran Gray, it is Arran Gray 9 on X, active in the Lemonade community on X, and we enjoy his technical analysis. It's kind of fun to look at the charts and try and find patterns and wonder if the natural patterns that we're seeing in the market will repeat and when do they repeat, that sort of thing. So thank you, Arran, for joining us. I know it's a little bit late in Edinburgh.
Yeah.
But It's been
Yeah,
Matt and
more
I
than
are
happy.
really enjoying working with you, and you have a brilliant mind. So we're curious to see where this goes from here.
Perfect, guys. Thank you so much. Thank you so much. Alrighty. All the
And
best. Till next
yeah,
time, I guess.
and with that, I'm going to say bye for now.